Hello and welcome to Stockwatch, your weekly news channel brought to you by Bitesize Investments. As we look back upon this week, these are the main headlines for the Magnificent Seven. There is about to be a new king of the stock market jungle. Microsoft is set to become the most highly valued US company ever, surpassing the record market capitalization set by the longtime leader, Apple. On Friday, Microsoft stock rallied 1.3% in afternoon trading to lift the company's market capitalization to $3.12 trillion. That puts it on track to surpass the current all-time high of $3.09 set when the stock closed on the 31st of July 2023. Apple plans to settle a lawsuit that accused tech startup Rivos of stealing its trade secrets relating to computer chip technology. It was reported that both companies had signed an agreement that potentially settles the case, and that the agreement allows Apple to examine Rivos' systems and recover any confidential information. Google One, the tech giant's subscription program, has surpassed 100 million subscribers. The new AI premium plan, which is $19.99 per month, offers AI features like Gemini Advanced plus Gemini in Gmail and Docs Plus. Amazon shares continued their charge higher on Friday, securing their highest close in more than 2 years. The e-commerce giant stock advanced 2.7% in Friday's session to finish the day at $174.45. Meta Platforms stock has rallied 290% since the beginning of 2023, while the S&P 500 has gained 30% over this period. The stock is currently trading at around $470 per share, and the company outperformed the estimates in the fourth quarter of 2023, with revenues increasing 25% year-on-year to $40.1 billion. It was mainly driven by a 24% growth in advertising revenues. Tesla, the electric vehicle giant, reported a staggering $97 billion in revenue in 2023. However, with the arrival of 2024, a series of challenges have emerged, significantly impacting Tesla's market position. In January 2024, Tesla faced a pivotal moment as its shares took a sharp decline of over 24%. The primary cause of this downturn was the anticipation of a weaker sales growth for the year. The impact of this decline is substantial, erasing approximately $80 billion from Tesla's market value. Nvidia is reportedly setting up a new business unit that will focus on designing custom AI chips for its customers. Tech companies have recently started exploring alternatives to the H100 and the A100 due to two concerns, which are costs and availability. Switching to custom chips helps on both of those fronts, so Nvidia is now building a new unit that will make custom artificially intelligent chips for its customers and grab a piece of the market that their rivals Marvell Technology and Broadcom Inc. have both actively been chasing. The biggest stock market movers this week are Nvidia with a 5.73% increase. Tesla has increased by 5.05%, Google have increased by 4.33%, Microsoft have increased by 2.6%, and Amazon with 2.5%. Our biggest loser this week is Meta with 0.38%, which is tiny compared to its 20% gain from last week. Now we come to the next segment of our Magnificent Seven weekly news update and dive into our stock focus of the week, which is Google. Let me know in the comments section which stocks you would like reported on during our stock watch. This is brought to you by Bitesize Investments. During this next section, we are going to examine the key metrics of the company by comparing them against businesses that operate within the same industry, as well as reviewing the bear and bull cases. In addition, we will look back at the historical share prices and find out what the target price of the company currently is. And lastly, we will then find out what the analyst's consensus is and what their forecasts are. Okay, now we're going to jump into the 5 key pillars for Google, where we look at EPS, free cash flow, revenue, book value, and return on invested capital. So to kick us off with, our EPS is 25%, our free cash flow is 19%, revenue is 12%, and book value is 14%. Return on invested capital is 24%, and all these give us a really good indicator of how well the company is doing, as ideally we would like these to be over 10%. Each and every one of these looks fantastically good. Now let's compare this company with other businesses within a similar arena. The two companies that we're going to compare Google against with this week are Pinterest and Spotify. The earnings per share for Pinterest is 113%, free cash flow is minus 10%, revenue 2%, book value is minus 17%, and return on invested capital is minus 7%. Okay, now we're going to compare Google with Spotify, and Spotify's earnings per share is 68%, their free cash flow is a whopping 890%, their revenue is a respectable 8%, their book value is minus 12%, and their return on invested capital is minus 19%. As we compare these companies together, we can see that Pinterest's earnings per share is a fantastic score of 113%. Spotify's free cash flow, 890%, is also fantastic. But those other numbers, such as the book value being minus 17% for Pinterest and the free cash flow being minus 10 and the return on invested capital being minus 7, these are all really negative things, and we really want to see those companies earning over 10%. Spotify, even though they've got a fantastic earnings per share and a free cash flow of 890%, those book value numbers, which are really important for shareholders, and the return on invested capital are margins that we really want to see over 10%. Even though Google's numbers don't have these massive numbers like Pinterest and Spotify for specific areas, they've got that consistency across all those different key metrics. This is why we can see that Google is part of the Magnificent Seven, due to their ability to keep making these numbers look good year on year. Okay, let's now look at the bull and bear cases. Let's kick off with the bull news, which is Google has now launched a premium AI service called Google One, which is a subscription-based package which costs $19.99. It has also been reported that YouTube has now become one of the biggest paid TV services in the US. To be honest, this next bit of news could also be seen as a positive. Google have decided to rebrand Bard and call it Gemini now. It has been reported that Google's driverless car called Waymo has collided with a cyclist, where thankfully neither the car or its passengers suffered any damage or injuries. And lastly, Google's share price dipped after it announced its latest quarterly reports, but has seen some recovery this week. Now let's look at the historical price of Google and see how it compares to today's price. If we go back to 2013, we can see that Google's stock price was trading at an average $22.20, and how it significantly progressed year on year to a very positive average share price of $118.80. Now let's jump into the analyst price target. Analysts believe Google's price target should be $150, and it's currently $145.47. Do you think this is a fair price target, or do you think it should be higher or lower? The overall analyst consensus for Google is that it is a buy, but it's got the potential to be a strong buy. Lastly, let's look at the analysts' forecast for Google, and they're predicting in 2024 a 19% growth, and then from 2015 to 2027 between 15 and 16% growth. In 2028, they're predicting a 23% growth. Do you agree with the analysts' future predictions, or do you think they are completely wrong? Thank you for watching until the bitter end. Please consider liking and subscribing to help the channel grow.